Hey yo, it's your boy Captain Blue. We are back with another video. This is day one of trading CRT like a pro. So as you know, CRT it's called uh, candle range theory. It's a model that ICT people use. You understand, to identify or to catch a move in the market. So as you know, we have two types of CRT, right? We have CRT, the PO3, and then CRT plus inside bar. You understand? So with me, I'm a fan of the CRT plus inside bar because of why am I saying I'm a fan of CRT plus inside bar? That's because of I can catch in a week I can catch 4 to 5 moves with CRT, and we all know that CRT, like the CRT PO3, it doesn't happen every day, but once you mix it with the inside bar, that's how you catch beautiful entries 4 times a week. You understand? So let's get into it. And then also don't forget the topic of the day. It's candlesticks. Candlesticks are the most important thing to check or to identify when you're trading CRT, right? So meaning you need to check the formation of the candles. Where does it sweep for you to get the opposite move? You understand? And also make sure that you check your daily bias. On how to check daily bias, probably just subscribe, and then you will catch up as the videos on the next video that I'll upload. So let's get into it. So this is a 4 hours time frame Nasdaq. As you can see, Nasdaq, it's bearish, right? And today it's what? Today it's Wednesday. So how did you trade CRT plus inside bar today, which is Wednesday, right? So if we check here, it's a 4 hours time frame, by the way, as you can see on the watermark. 4 hours time frame. So you just zoom in because of what, you don't have to focus on much, just focus on what's happening today. We trade based on what I trade. Okay, let me put it this way. I'm a day trader. I trade based on what I see on that specific day. You understand? So this is a 4 hours time frame, right? So let's just zoom in. We only need this part. This is where the market actually opened for today, right? Which it was 12 a.m. midnight. You understand? So with this candlestick, the only thing that I like about this candlestick is what it opened. It gave us what, a candle range low. You understand? And a candle range high here, right? So meaning that was the most important thing, or that was the most beautiful part I liked about this candlestick. You understand? And then from there we can see the market continued moving. So but with me, after marking my candle range, let me just mark it like this. After marking my candle range high and candle range low, I don't use this time frame to identify total sweep or liquidity sweep. You understand? So I'll show you the time frame that I'm using, or the time frame that I'm comfortable with trading CRT plus inside bar. You understand? So we are going to mark our candle range high, candle range low here, which is our CRL, and then let's put this on the right. Understand? And then from there we clone it. After cloning it, we put it on top of that, what, on top of the wig of this for our candlestick, which is our candle range what, high. So you can just change here and put H. That's candle range high. You understand? So after marking this, which time frame do I use to continue my trading? You understand? I use a 2 hours time frame, and I'll let you know why do I use a 2 hours time frame. You understand? So let's go to 2 hours. So this is a 2 hours time frame, right? Two candlesticks, they define 4 hours, or two candlesticks, it's a 1 4-hour candlestick. You understand? On a 4 hours time frame here, two candlesticks, it's equals to 1 4-hour candlestick. You understand? That's why I'm calling it CRT plus inside bar. You understand? And then why do I use 2 hours? So with 2 hours, you can see it gives you a lot of beautiful rejections, like the liquidity sweeps. Look at these wicks. You understand? And then look at these sweeps here, the wicks. You understand? The rejections. It gives you like clear rejections. You understand? On a 2 hours time frame. So that's why I'm comfortable trading this model on 2 hours. You understand? So now we have what? Our candle range high, which is this one here, and our candle range low, which is this one here, right? Sorry, our candle range low, which is this one here, right? So these two candlesticks, it's a 1 hour, it's a 4 hours candlestick. You understand? These two candlesticks, if you go to 1 hour, sorry, 4 hours ish, yeah, if you go to 4 hours, it's a 1 4-hour candlestick, since 2 plus 2 is 4. And then if you can check here, inside that range, inside the range, we have these two candlesticks again. You understand? That's what we call the inside bar. You understand? The inside bar, meaning this type of CRT, it's not consist of 3 candlesticks, but 3 to 4 or 5 candlesticks. You understand? You can get a setup on inside bar with probably more than 3 candlesticks. You understand? So now we have the first 4-hour candlestick, which gave us the range, and then the second 4-hour candlestick, which gave us what? The inside bar. And then the third, you understand, 4-hour candlestick, which gave us what? A total sweep, which is a liquidity sweep, and an entry. You understand? It also gave us what? An entry. You understand? So let's go and explain everything into detail. You understand? On how did I get the entry after marking my candle range high and my candle range low. So with this concept, you understand, with this concept, whenever you mark your candle range high and your candle range low, you understand, when you mark your candle range high and your candle range low, you wait for the market to either sweep the high or sweep the low. So if it's like this, you wait for the market to either sweep this high, this candle range high, and then you look for the market to give you what? A push inside what? Inside the zone. Once it gets inside the zone, and then that's where you wait for a what? You wait for a pullback into a zone here. It's either it's a fair value gap or a supply zone. You understand? So once it gets to your supply zone, and then that's where you're going to be taking your entry and targeting what? The CR low. You understand? So also, most of the time, for you to get proper confirmation, you also go to a 1 minute time frame and look for a somewhere here, between here when the market was pushing to the downside, look for a change of character. That indicates to you that, okay, the market is changing direction into pushing to the opposite direction. You understand? So once you get that change of character, that's confluence. That, okay, now I can target my fair value gap somewhere here or my demand zone, and then I take my entry exactly there and then target what? The CRH. Sorry, the CR low. You understand? And then just like that, you done planning your trade, and then you trade your plan. You understand? So, but now here we got something that's different. You understand? On this model that we are having here on the chart, look at the live chart. We have a what? The market distributed to the what? To the upside. Instead of the market sweeping what? The CRH, it took out what? The CR low here. You understand? So it took out the CR low, which now we know that, okay, we are expecting a bullish move. You understand? Once it sweeps the low and then it closes inside the range, then we know that, okay, we are looking for what? For a bullish move. So it swept the low and then it closed where? Inside the range, which is a valid CRT. You understand? So after that, when you are done spotting what? Your liquidity sweep on a 2 hours time frame, right? So you're just going to mark that liquidity sweep. It's either you mark it a liquidity sweep or a total soup. You understand? You can just write TLS, which is what? Total soup. You understand? TLS. So now you got your TLS, right? Which is a liquidity sweep. And then the market pushes back into the zone or into the range. You understand? And then that's your Q. After this, you start going what? You change from this 2 hours time frame to a 15-minute time frame. That's where you will find your entry. You understand? So let's go to 15-minute time frame and then look for an entry on a 15-minute time frame, right? So on a 15-minute time frame, you're going to have something like this on the screen. So we don't have to focus on this move that's above here. We focus on what? Candle range high, candle range low. You understand? See, if you take a trade here below, you are targeting what? Your candle range high, and then you call it a day. It's simple as that. You understand? So when it's like this, now I can just put this here. So this is how it looks like, or this is what it looks like on what? On a 15-minute time frame, which is this move. It's your what? Your range. And then this move here, it's your inside bar. You understand? And then this move here, it's your sweep. You understand? It's your sweep. And then what are we expecting? A push to what? To our candle range high. Since we sweep to what? Our candle range low, and then the market closed inside what? Inside the range. And then now we're expecting a distribution to the upside until targeting our what? Our candle range high. You understand? So let's just remove this. I hope you understood. If you have questions, make sure to leave them in the comment section and then I'll get back to them. You understand? I'll definitely go through your comments. So now this is what we have, right? We can see that so far we are not getting what we need. We have two entry models, you understand, with CRT. It's either we enter on a what? On an order block, which I call it supply and demand. It depends on where you've learned the strategy. With me, I'm coming from a what? I'm coming from a smart money concept background. You understand? So I call them order blocks. I call them what? I call them supply and demand. You understand? And then the second model, the second entry model, it's fair value gap. You understand? It's either you enter on a demand if you are looking for buying opportunities, or you enter on a fair value gap. It depends on what the market respects on those two things. Or do you have a fair value gap? Do you have a demand? You understand? So let's look at our chart. On 15 minutes, we don't see those things, right? We don't see these things. Here, we don't have a fair value gap because of what? It was filled. You understand? And then here we don't have a demand zone, like a clear demand zone. You understand? So where do we have to go? You understand? We go to a 1 minute time frame if we don't find what we need on a 5 minutes. You understand? So we go to what? A 1 minute time frame. You understand? Just like that, we are now 1 minute ish. 1 minute. Sorry. Okay, so now we are on a what? We are on a 1 minute time frame, and then this is what we have. You understand? So we are going to be focusing on here. This is where we got our sweep, right? And then now we are looking for a zone to enter from. It's either we find a fair value gap or a what? A demand zone. You understand? So let's just zoom in, right? So this is what we have, right? This is what we have, right? So here we can see that there is a move pushing to the upside, but this is not a what? A valid fair value gap. A fair value gap has to be, we don't have an upper wig on this candlestick, you understand? We only have what? A lower wig on the third, you understand? Which is a zone that we don't have to be targeting. So let's come here where the market started ranging, right? Exactly here, you understand? Where the market started ranging. And remember, look at the time. It's still 10 o'clock, you understand? It was 10:15, which is London session. So on this one, we caught the entry in the morning, you understand? In the morning. So when you come here, you can see that, okay, the market started ranging and then gave us what? This high here, right? It gave us that high there. And then the origin of this break of structure, you see this break of structure here. Where is the origin of that break of structure? The origin, it's the what? The last bearish candlestick before the push to the upside. Where is the last bearish candlestick before the push to the upside? It's this one here. You understand? Sorry, it's that one there. This one here, right? So we are going to be using that candlestick as our what? As our demand zone. So let's mark that candlestick and see if the market respected that zone. Perfect. You understand? Perfect. So, and then here we're going to just write 1M demand zone. Why am I writing 1M demand zone? I don't feel comfortable monitoring the charts on a 1 minute time frame. So I babysit the charts on a what? On a 15-minute time frame. You understand? So we got a what? We got a break of structure here. That indicates to us that the market is bullish. You understand? First thing, also one thing I forgot, a change of character here. A 1 minute change of character. Why are we saying this is a change of character? You understand? The market was pushing to the downside. You understand? The market was creating lows and breaking them, lows and breaking them. And then from here, it created a low and a what? A lower high. You understand? Sorry, a higher low. Yeah, those things are, yeah. And then after it created this high here, it went down. You understand? It failed to create a new low here. You understand? It failed to create a new low here. You understand? So as you can see, these lows are not equal. You understand? Then from there, instead of taking out this low, it went for the high, which gives us what? A change of character. That indicates that, okay, we are good. You understand? And then from there, a break of structure, and then a pullback. You understand? It gave us a demand zone. Then it gave us a pullback into the demand zone. So we're just going to mark that demand zone as it is. And then let's go back to our what? Our 15-minute. You understand? So this is a 15-minute time frame. Since I said I monitor the market on a 15-minute time frame. You understand? I don't feel comfortable with 1 minute. You understand? So yeah, so let's, yeah, this thing is far. Reset the chart. Okay, and then 15 minutes. Okay, so this is what we have on the 15 minutes. You understand? This is what we have on the 15 minutes. So if you want to see this clearly, because of here I can see you are having a hard time in seeing. Let's go to the 5 minute. Okay, yeah, on the 5 minutes it's a little bit better. And also on the 5 minute there is something that I didn't notice. We have a solid demand zone here, guys. On the 5 minute we have a solid demand zone. This is the origin, so we can refine it. You see, it also aligns with what? Look at this demand zone. It aligns with what? It aligns with the 1 minute demand zone. So let's get rid of the 1 minute because of what it was. Yeah, so this is a what? A 5 m demand zone, right? And then when it's like this, you see a change of character and then a high, then the market pushed down, right? And then it left this demand zone. Then from there it gave you a solid break of structure, came back, retested the what? The zone, and then from there a push to the upside. So this is how it's looking, you understand? So with this thing, now I start doing what? I have to start looking. I have found my entry zone, you understand, which is here. And then after that I need to find what? A TP1. What is a TP1? Where I need to break even. Once the market hits that level, I need to move stop loss into break even. You understand? So since I'm coming from a smart money concept background, this is the only area that I see as an area of liquidity. You understand? We have a lot of liquidity resting here. We have a lot of sellers exactly at that level. You understand? Which is going to be my area of liquidity, and then it's going to act as what? TP1. You understand? Here, TP1. And then TP2, it's the overall CRH. You understand? And then from there, I just wait for the market to come and mitigate my demand. Some people who take risky entries, as soon as the market mitigates their demand, they enter. So with me, I'm a person who likes good confirmations, you understand, or safe entries, you understand. So for me to be safe, I need to see the market mitigating my zone, and then as soon as the next candlestick closes above my zone, you understand, that's where I take my trade. Here I can see that the market mitigated, and then the next candlestick closed above the zone, you understand, and then that's where I can take my trade there, and then I target what? My CRH as my overall TP, and then stop loss, I just put my stop loss here, you understand, put my stop loss below the demand zone, so that if the market is doing what? It's still playing around this zone, you understand, I'm still safe, you understand, I'm still safe. I can only move my stop loss into break even once we hit TP1. So as you can see here, it smashed TP1, and then where do you break even? You just put your stop loss from there, put it exactly at the 50% of the demand zone, you understand, you put it exactly at the 50% of this demand zone, and then from there we can see that the market pushed, TP1 was smashed, and then here we see that it struggled to hit the overall TP, you understand, it struggled to hit the overall TP. Then we got a pullback, a little bit of a pullback to this level, and then from there TP was smashed, you understand, during New York session TP was smashed, you understand, and then just like that, that's how we traded the CRT plus inside bar on Nasdaq, you understand. So make sure you backtest this. Make sure you subscribe so that you can get more videos like this. So I'll keep on dropping this time. I'm going to keep consistency on this YouTube channel, you understand? So make sure you subscribe, follow, like, leave a comment, yeah, those kind of things. Do them so that you get notified whenever a new video is dropped, you understand? So make sure you backtest this, and then yeah, and also make sure you follow us on all of our platforms so that you don't miss out, you understand? So that you don't miss out. See you on the next video. Take care.